let's get ready for another insightful session as we bring to the stage someone who needs no introduction within our own wall. Our next speaker is not just a market expert. He is part of the family. As the head of research of Malacca Securities, he is the force behind the scenes, the brilliant mind who guides us through the complex equity market. So, ladies and gentlemen, please join me in welcoming our very own head of research, Mr. Loui Lau, as he takes the stage to share the 5 key trends that could be the game changer in the market. Over to you, Loui.
Thank you, MC. Good afternoon, everyone. So welcome to this new era of wealth, 2024 Investment Summit. And I will be sharing with you 5 key investment trends for 2024. So basically, I just want to show you my whole slides. This is the first slides. And this is the part of the slides that being created from AI. Okay, these are my key themes here. I just put into the Bing inside my app, and I started to create this image within 30 seconds. Are you guys amazed? Yes. Do you think this AI will be the trend going forward? Yes, right? And will sustain. But may not be Nvidia, may be other things, second wave, third wave of things, but definitely it will come. So inside of this, this picture itself, we have Malaysia, we have Bitcoin, we have uranium, we have oil and gas. So basically what I want to say here is that we could be entering the Industrial Revolution 5.0. Although maybe people have said that, you know, it has started since 2020, but I would say that after OpenAI has started this journey in 2023, this might be even expediting all these processes. Do you all agree? Okay, so I just want to set the tone for this year, what sort of key information that I want to take from Fed Fund rate and also dollar index to craft my 5 key investment trends for this year. So we understand that most of the speakers has actually identified that the trend for the rest of the 2024 will be on a more dovish tone. Dot plots has been saying that we are likely to have 3 to 6 rate cuts this year, and therefore that could actually lower down in terms of the US dollar strength. So in that case, there are 3 things that may happen from this point of time, whereby I think the first of all, if US dollar's trend is actually coming down even lower, then we might have a commodity here, because sometimes we are generally speaking, when the US dollar is coming down, the commodity prices will go up, as what we have seen in gold prices and also oil and gas recently, the crude oil prices. Secondly, if you think about 2022 and 2023, we have experienced a very significant increase in terms of interest rate in the US. So that has caused certain companies to have higher borrowing costs. Do you agree? And therefore, their earnings might have declined a little bit. But if the interest rate is actually on the potential cutting in 2024 or going forward, then their borrowing costs might be lower, then it would boost their earnings going forward. So that is the key number 2 for this Fed Fund rate and dollar index. Number 3, how they want to reduce the rate is also very important. If okay, CPI numbers or inflation numbers is coming down, and they say, oh, I want to, because I've tackled the inflation numbers quite well, and therefore we are reducing the rate. Is this a good sign? Is this a good sign? If inflation numbers is down and they want to reduce the rate, good, right? But what if one day US GDP is coming down softer than expected? Okay, then we might have going into a hard landing. Then the media will say that, you know, we are going to a softening of the US economy, and therefore we want to reduce the rate. Is that a good sign or a bad sign? It's a weaker sign as compared to the first scenario, right? So what I want to mention here is that reducing the rate can be good, but depends on how the media want to paint it. Okay, so that is what I want to bring to you. So we definitely don't want the scenario number 2, whereby the media is saying that US economy is going down, and therefore we are lowering down the interest rate to reduce to stimulate the economy. So that is not what we want. We want to hope for CPI numbers is moderation, pace of growth, then they reduce the interest rate. So that is what we want to see. So as of 2 weeks ago, I have captured this Fed Fund rate interest rate probability cutting. Okay, so during the time it was the May and also June that the market is expecting significant cut. Okay, I mean quite high probability that they will be cutting in May and June. But right now, as I checked yesterday, the probability of cutting has been reduced and delayed to June. So which means that they might be delaying the cutting from that point onwards. But based on dot plots that we have seen earlier in this slide, it is quite likely that the Federal Reserve is looking at a lower rates in 2024 and going forward. So coming to the next point, which is the dollar index, is very important for us to understand what theme should we be looking at. So Fed fund rate is one thing. Second thing is the dollar index. So dollar index, based on what we have said earlier on, if Fed fund rate is coming down, and therefore US dollar should be on a weakening path, and that should provide a good year for commodities. And oil and gas, and also one of the very niche area that I want to mention later, which is uranium. Very exotic, but very niche. Just give you an example of this Bloomberg Commodity Index. It has been down over the past couple of quarters, okay? And this Bloomberg Commodity Index tracks the gold prices, crude oil, light sweet crude oil, natural gas, soybean, corn. Top 10 of this has contributed to about 60% of the weightage of this index itself. So if any of this would to go up, like for instance, crude oil has been going up above 78, 80 US dollar per barrel, and gold has been sustaining sideways above the 2000 level. So all this will contribute to this index itself. Currently, it is hovering at the turning point, a point whereby it is supported near towards 91 to 96 level. So I hope that if the US dollar is actually coming down, then this has a chance of going up. Therefore, our theme for the first one would be on the commodity side of things. So two sectors that I will look at will be, one of it, oil and gas. And if the demand from Petronas Activity Outlook report recently has said that over the 5 years, they are going to increase by 40% based on what we have seen in the past 5 years activity report, this will contribute to a major re-rating catalyst towards the hookup commissioning and also maintenance construction modification segment. I also do not rule out that this flow of value chain would flow down towards pipes, valves, and fittings for the oil and gas segment, and also demand for support vessels will remain elevated. So based on this first commodity theme, I have two sectors. One is the oil and gas sector. Second part of things, we will be looking at very exotic, which is uranium. Okay, not many people know that a lot of countries are actually using a nuclear power reactor. So in some of this report during June 2022, International Energy Agency mentioned that they are actually moving away from this fossil fuel and likely to have more of this emphasis on clean energy, renewable energy. So that is why even a lot of countries are actually going into 2050 net zero. So that is a trend going forward, and nuclear energy is one of the solutions, okay? So during this part of the event, we have seen these numbers actually creeping up, meaning to say that from 2020 to 2050, we're going to expect more and more capacity to be added, additional 30 gigawatt per year from the 2030 onwards. So this will be one part for the nuclear energy. And in the most recent Dubai conference, COP28 climate conference in Dubai, they mentioned 22 world leaders actually declared that they want to triple the nuclear capacity by 2050. So that is amazing stats from all these world leaders to say that they are going to use the nuclear energy as part of their solution to get net zero emission, okay, by 2050. So this is from World Nuclear Association. I mean, nuclear power definitely is not very familiar to us, but in China, in North America, in West and Central Europe, they are actually using it. Around the world, we have about around 300 nuclear power reactors, and therefore, the raw mat for this nuclear reactor is definitely uranium. So even recently, uranium prices has jumped when Kazatomprom flags production shortfall in 2024, and that has actually led the uranium price even higher. So looking at this uranium price since 2017 to 2024, I think it's about 20 US dollars at that time. Right now it's above 100 US dollar level. Yes, you might say that this might be a euphoric event for the weekly spot prices on uranium 308, but I would say that going forward, if we want to achieve the net zero, definitely they need renewable energy or clean energy, and this is part of the solutions towards net zero going forward. So definitely there will be some stocks ideas, not tips here, stock ideas for you all to refer to. Part and parcel of this oil and gas sector, we can see Usma, Charimin, Dilium are part and parcel of Petronas-related companies. Okay, Pentec, which is one of the very high dividend yield counters with pipes and valves and fittings kind of segment. I think they are also benefiting out of this situation. Icon Offshore, I think 2 weeks ago when I was in another event, we have mentioned this company, and it has risen from about 74 to 79 recently. So part of the uranium concept stocks, I think URA ETF, if you are not familiar with what companies are under uranium concept stocks, just buy the ETF, because buying the ETF will give you exposure towards the whole concept or whole nuclear power plant kind of concept, kind of stocks ideas. But if you are more familiar with stocks you want to study further, these are two ideas here: UEC, Uranium Energy Corp, and also CCJ, Chemical Corp. Okay, so these are part of the first team that I want to mention here. So talking about next, we have the crypto space. Okay, Bitcoin recently has actually fallen quite a bit, but it has stabilized about 40,000 level. And for the crypto space itself, Bitcoin is the one that is being focused right now because of the halving by April 2024 this year. And more of this funds flow will go into Bitcoin space because of a lot of spot ETFs are actually being approved. Okay, there is at least 11 ETFs are now approved and being traded. Okay, so what we are seeing right now is more inflow of funds into the crypto space, and not forgetting what is next. Okay, next will be the Ethereum space. So try to monitor on this segment. I believe that Bitcoin could be sort of like a replacement towards the gold segment, and therefore they are a core currency, but I would say that they are also common commodities. So whenever US dollar is on a weakening path, therefore we might be looking at Bitcoin to go into a positive path from that. So for Bitcoin related trading segments, you can actually look into CSOP, Bitcoin futures ETF, or Ether future ETF in the Hong Kong market. ProShares Bitcoin strategy has been there for quite some time. Bitwise Bitcoin ETF is the most recent approved, okay, one of the approved spot ETF. They have the better expense ratio, which is around 0.2%, if I'm not mistaken. So this will be one of them that you can actually trade on. So for crypto-related counters that you can actually look into will be Coinbase, MicroStrategy, Marathon Digital, or even CME Group. So these are crypto-related companies that relates to Bitcoin or crypto space, and the above part will be the ETF that is related to the Bitcoin or crypto segment. Okay, third, just now I think Kevin and also, Kenneth and also Alvin has actually mentioned about Malaysia. So what is good about Malaysia? I think this year, most of the stars are aligned for Malaysia. And I would say that last year itself, 2023, it has been a consolidation year for Dato Sri Anwar Ibrahim to actually plan it well, to execute for the next 3 years. Okay, assuming that all under the political developments is stable at this juncture, and based on what we have seen last couple of quarters, what we have seen in terms of how they want to push out these projects, how they want to create and craft this roadmap in terms of NETR and NIP will certainly dictate how the future looks for Malaysia. So we have seen also the easing requirements of Malaysia as second home, and that has dropped the, I think, asset of the particular individual from 2 million to 500K. That is the first tier, so that they can come in easily to Malaysia. So we are attracting talent, first of all, and also we are looking into all these different kind of projects and also master plan. And last but not least is also data center that YTL has a collaboration with Nvidia that has put Malaysia on the map again. So over the past 1 year period, we have seen the planning stage of Dato Sri Anwar Ibrahim. Right now, it will be the execution. So from last year, July onwards, we can see that construction sector, property sector has been running. So that is due to the mega infrastructure projects. And if you imagine, if they want to develop Penang and also JB into a better city, what is next for them will be connectivity. So they have been talking about Bayan Lepas LRT, and therefore that will be another 5-10 years of growth in terms of construction activity, in terms of connectivity or transportation point of view. And in JB side, we have the RTS link, just now I think Alvin has mentioned as well, and that could actually put our site, in the JB and also Penang, into a better growth area for the next 5 to 10 years. So imagine, past 10 years, Selangor, Klang Valley has grown from LRT to 123 and MRT 123. What if Penang and JB can have that as well? So that would be another growth factor for construction sector. So to give you an understanding of the data center capacity in Malaysia, a lot of focus are being put into JB side. Data center capacity right now in Kuala Lumpur is about 211 megawatt, but in JB, under construction there is about 173, early stage 427, committed 97. So which means that a lot of people are building data center there. And why is the reason? Is because Singapore constrained. Just now we have to understand that from the land cost itself is also constrained. When you want to buy a land in Singapore, it's actually 5x more than JB. So in that sense, you can reduce the cost. Secondly, the construction cost is also lowered by 40%. So in that sense, the Singapore constraint will be the benefit for the Johor side of things. So we can imagine this as Hong Kong and Shenzhen and Singapore and also JB. That kind of connectivity going forward will be very, very useful to build up the Johor into a next area of focus. So if you think about Johor construction, property, renewable energy, utilities, what can you think in your mind right now? One stop. Or one company that is related to all these 5 stars. Start with Y lah, YTL or YTL Power lah, because they have hit every spots in this catalyst, right? So in that sense, I want to say that yes, YTL Power has all the stars aligned, but is it expensive to put your money into it? Perhaps you have to wait for another base building towards at least 10-15% retracement before another uprun. I would say that recently there is a lot of people that is changing their price target to suit towards the current price action. Some brokers out there are changing their target price, but I would say that try to think back what happened during Top Glove event or during Glove euphoric event as well. So try to be mindful, but you always have to position yourself in a way that your cutting loss must be there, cut loss strategy must be there. Okay, this is just the pipeline of data center in Johor. What I want to show here is that a lot of companies, Equinix, GDS, VETS, Yonder, YTL is there. So basically, everyone is rushing into JB to buy some land. And even Eco has bought up some land since last quarter. They bought about 200 million worth of land. Recently, they add on another 400 million of land there. So again, I'm seeing that property market or right now, people are rushing in. Therefore, there is a good chance of us making some good money from there. Not forgetting the water consumption. If you notice, YTL Power bought into Randhill, 19%. Why is it so? It's because data center needs electricity, especially green energy, as well as water, to cool down the cooling measure of the data center. So this is just to show you that Google, Microsoft, Meta has been increasingly using more water to cool down their data center. And basically that will sum up the whole scenario for Strategy Malaysia. So construction, you can look into Econ Berhad, TRC. These are some of the laggards that has not been running yet. So I'm trying to put some companies that is more worthwhile to look at, some laggards play. Property companies, you can look into Eco, KSL. Building material segment definitely is a proxy towards construction and property. And MN Holdings, SCG Berhad, Powerwell is the one that is we are monitoring for some good growth. If you notice Powerwell, they are actually doing some substations work for factories and things like that. So basically, they are more promising in terms of building the substation for this kind of companies going forward as well. And data center, YTL Power will be the limelight. Utilities will be Semi-Dun, Tenaga, and Randhill. So green energy yesterday, I think renewable energy or LSS 5, to put it simply. Yesterday, I think over the weekend, we have seen some of the news coming out from large-scale scholar, the 5th plan. I think previous years was LSS 4. So they are looking at 500 megawatt, and 100 megawatt is for the rooftop solar, and another 400 will be for solar farm. So basically, this could be another catalyst for green energy or renewable energy. going forward. So St. Maiden, Brand Hill will be part and parcel of that area. Okay, talking about the Industrial Revolution 5.0. What are the similar characteristics between all these IR Industrial Revolution? So first of all, I think they have saved a lot of time when they have the shift in IR. So mechanization, mass production, automation, Internet of Things. So basically what I want to give you an understanding is that the different IRs will only have one characteristic or few characteristics that is very similar. Increased quantity in terms of your output, more efficient, more optimized in your time. So what I can see right now in terms of after the OpenAI has started their journey, we have seen a lot of people using AI. So right now there are two categories of people. One is human that using AI and human not using AI. So I think the one that is using AI will be more optimized, more increase in efficiency, and definitely your output or quantity will be much better. So that is what I think about the current position right now. So to understand the whole structure here, last year I think we are only looking into perhaps Nvidia, which is related to hardware. But right now we might be looking into more areas from this event. So data processing, storage, public cloud, data center, hardware. So these are related to all the recent activities of running in the US. But what I want to put you into the second wave of AI. For instance, you can see that a lot of AI-generated content has started to give you the subscription basis of model. So like Adobe has Firefly, they start to provide this subscription form. So I would say that SaaS will be the future of AI, software as a service, and therefore if they have recurring income, people will use that recurring income and buy into the company. So other than that, we are also looking at cybersecurity. So cybersecurity, I would also look into Fortinet as well, because Fortinet just has a base and looking at for the breakout soon. So all these are related to AI, but you can actually capture into the next wave of AI. So try to wait for any of the pullback, then you can actually position yourself with some strategy of cut loss and try to target at least 1 to 2 risk to reward ratio. Okay, last theme for the day will be the Hang Seng versus US dollar trend. So this is a broad view of what has happened over the past 5 years in terms of US dollar versus Hang Seng index. So if we have this chart itself, the general rule of thumb is if US dollar is going up, then Hang Seng index will be going down. And they have an inverse relationship between these two assets, okay? So right now, in our first cost will be cause and effect, right? So what we want to look for, the theme this year is based on Fed fund rate and also dollar index. So if we are looking at Fed fund rate to go lower going forward, therefore US dollar should be on a weakening path, and therefore Hang Seng index will be assuming to go up from this point onwards. So my idea is that the fall was due to the COVID-19, recovery was subdued, consumption spending was softer than expected, Jack Ma disappeared from the public view. I think this is very significant because technocrat basically was not being able to appear in China context, and Hang Seng went up more than 50% since then. Okay, right now, just a few days ago, if you recall, what are the new catalysts that can come in from this is China is aiming for 2 trillion yuan to be injected by China. PBOC announced 50 basis points cut in RRR, reserve ratio requirements, that will unleash $140 billion into the system. China government will take consideration of market cap of SOE as the KPI, okay, as the KPI for the performance of the head. And therefore, a lot of SOE, state-owned enterprises, has been running up recently. And Jack Ma reappeared, buying shares in Baba. So that is the whole idea about the fall and also the rise. And the rise recently is about 8% on 3 bar in Hong Kong. That has not seen since 2022 November. Okay, so in out of this period of time, this 3 bar is very significant of 1,400 points of reversal, and that could be provide you a good short-term trading move, whereby we may be actually able to do one kind of strategy, which is buy on support, sell on the rebound, and look for China companies, state-owned enterprise that is related to oil and gas exposure, because we are also targeting commodities, oil and gas, and therefore we will look at PetroChina or even CNOOC as one of the counters, and only select those uptrend counters as Pinduoduo and also Edu. I think uptrend counter is very important for us. And if companies that has exposure outside of China is even better. So they have global exposure, therefore they are not really they have diversified their risk out of China itself. So I think that will be some of the 5 themes for today's session. Yep, I just want to add on, this is the part whereby, to summarize the strategy, traders market, short-term trading, buy and support, sell and rebound, and China SOE, state enterprise with oil and gas exposure, PetroChina and CNOOC, whereby they have high dividend yield. And if you're looking into technical analysis point of view, only select uptrend counters. Ping Toto is one of them, New Oriental Education. Okay? So that's about it for my session. Thank you so much for your time, and see you again in the Q&A section.